Hey everyone, and welcome back to another video for today. So let's talk a little bit about SoFi. Tanner from Future Investing did a wonderful video talking about the loan platform business, the amount of money that might come in, the take rate and all of that. So I do want to touch on a couple of things that were mentioned there. His video will of course be linked down below. Great video, probably one of the best videos on SoFi more recently. Now SoFi at the time of making this video is trading at around $13 or so. During the day, it's down 2.6%. The overall market is down, so not that surprised. Year to date, we are down 6.7%. In the last 12 months, we're still up 83.3%. In the last year, up 42.5%. And currently, the market cap is $14.85 billion. Now, in today's video, I also want to touch on the brand awareness aspect of SoFi, marketing, spend, events, TGL, and actually a new one as well, and a couple of tweets, actually 2 tweets from Anthony Noto that could positively impact the tech platform Galileo side of things at SoFi. So let's discuss all of that in this video. If you enjoy this type of videos, hit all the buttons, would really appreciate that. If you want to support me even further, do check out the link down in the description. And hit up in comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. We're also going to touch on PayPal towards the end of this video. Okay, so first up, if we look at institutional ownership for SoFi, well, you can clearly see that they've been loading up on SoFi shares, even when the stock did drop, even when the stock went up a little bit higher as well. Institutional ownership keeps going up. Good to see. Then, 2 tweets from Anthony Noto. By the way, the TGL event sponsored by SoFi, apparently great success, super popular. If you look at the clips, lots of clips went viral. The fans there were really engaged. So great first edition of that event. Now, we've had 2 tweets here by Anthony Noto. One, a retweet from Ken and Megan saying, SoFi, start your day getting your money right. He tags here Howard Lutnick. We can be your one-stop shop for all financial service needs. All treasury payments, all social benefit payments, digital wallets, a SoFi stablecoin backed 1-to-1 by US dollars with interest, and much more. I think this is one of the first time we actually hear SoFi talk about a stablecoin backed 1-to-1 by US dollars. Maybe I'm mistaken. If so, do let me know down in the comment section below. But yeah, starting to put some pressure, I would say, on Howard Lutnick, on maybe the administration as well, to maybe start looking towards SoFi and Galileo. Second tweet. This is also a retweet from Will Adams here. So he tagged Anthony Noto. If you haven't watched the Howard Lutnick all-in interview, by the way, if you haven't watched that, I highly suggest you go watch that one and the one from Scott Bessent as well. Probably one of the better podcast interviews in the last year plus or so. So if you haven't watched the Howard Lutnick all-in interview, the administration wants to work with companies directly and in return get a piece of the stock upside for the Sovereign Wealth Fund or SS Fund, student loans payments, ? Anthony Noto here retweeting, no one better to do that than SoFi, tagging here Howard Lutnick, Elon Musk, and POTUS. I mean, if we do get an announcement that SoFi Galileo is one of those companies that wins the contract, one of those companies that wins that contract, I think things are going to get extremely interesting. Extremely interesting, and I think SoFi already has links with the treasury. So, I mean, 1 + 1 = 2. Hopefully it equals a couple of hundreds of millions of dollars in the future. Now, continuing here on the brand awareness thing, remember, last quarter they told us the following. Bringing new members into our productivity loop starts by having a trusted household brand name. For example, we recently unveiled a first-of-its-kind partnership where our brand is presented side by side with a sports league's brand in TGL presented by SoFi, a new tech-driven golf league broadcasted live on ESPN from the new state-of-the-art SoFi Center in South Florida. Given SoFi is part of the league's brand, we get millions of impressions everywhere that TGL brand goes, allowing us to reach a broader audience over and over. Overall, our brand building efforts are yielding strong results. In 2024, our unaided brand awareness reached its highest ever level at over 7%, up nearly 170 basis points from last year. And of course, this year we know they're going to spend more, they're wanting to grow more, so they're investing more. That's why in 2025, we are taking a small hit towards the bottom line. I think that's the right thing to do. Then, this was just announced, CMA Fest presented by SoFi. SoFi is thrilled to be the official bank and first presenting sponsor for country music CMA Fest. With our country music's growing popularity, CMA's shared commitment to innovation, and the fan experience at the festival and on broadcast, this is an incredible platform to introduce SoFi to more people. And for our SoFi Plus members, exciting pre-sale ticket access, VIP perks, and more. See you in June. Now, talking about SoFi Plus, this was asked by an analyst as well, talking a little bit more about SoFi Plus. Just what is the thought behind that product? What is your vision for that product? I did a specific video talking a bit more about SoFi Plus, but this was the first good answer here that we've got from Anthony Noto. So he said, yes, it's not that easy to communicate to the world that you're a one-stop shop. So we do a lot of product advertising, but we do brand advertising, as you can see right here, and we want that brand advertising to halo to everything else. So as I thought about what's unique about SoFi and I thought about our one-stop shop, I was also in this mode of trying to figure out how do you market it in a very telegraphic way. And now this SoFi Plus thing, we've seen that with other companies as well. A Robinhood, for example, it makes sense. You pay a little subscription, a monthly subscription, and you get a lot of perks. You get an extra % here or basis points here and there. You get access to pre-sale tickets, IPO, whatever, better loan rates and all of that. To be honest, it makes sense. It's something that we knew that SoFi was going to do. So yeah, hopefully 2025 is the start of something quite big for the company. Because all in all, they're still quite small, right? To become a top 10 financial institution in the United States, there's still a long way to go. And now the big one, right? The big one, as you know, 10 days or so ago, actually 2 weeks ago, we had this announcement. SoFi expands loan platform business with $5 billion agreement with Blue Owl Capital Funds. So they're finalizing up to $5 billion loan platform business agreement for personal loans with funds managed by Blue Owl Capital, a leading asset manager with over $250 billion in assets under management. This move marks SoFi's largest loan platform business agreement to date. SoFi's loan platform business refers pre-qualified borrowers to loan origination partners as well as originates loans on behalf of third parties. We talked about that as well in other videos. Now, this is a 2-year deal with Blue Owl Capital. Managed fund reflects the growing demand for personal loans from members and debt investors and advances SoFi's strategy to diversify revenue streams with less capital-intensive and more fee-based sources of revenue. This represents the largest single commitment for SoFi's loan platform business, and it's 2x our first commitment, enabling us to help more members get their money right while also diversifying towards less capital-intensive and more fee-based sources of revenue, according to Anthony Noto. We're thrilled to work with Blue Owl Capital and build on the strong momentum in our loan platform business in 2025. Switching to the head of alternative credit at Blue Owl, he said Blue Owl is excited to be partnering with SoFi to help meet the growing needs of customers through their loan platform business. SoFi has been expanding credit access to more people with innovative solutions. We see a strong opportunity in being part of this growth through this strategic partnership. Now in 2024, remember, SoFi Loans Platform Business originated $2.1 billion of loans. Through its loan platform business, SoFi earns fee income to originate loans on behalf of partners while retaining servicing rights. Now, of course, we've talked about this side of the business being very exciting right now, after everybody's been disappointed about the tech platform Galileo. Where's the growth? Why should we deserve a high multiple? Is this the AWS of fintech or not? But as we've said in the past, it doesn't really matter, right? If we now have a new business inside of SoFi that is growing super fast, that is becoming more and more profitable, high margins, then why should we care? Of course, we would love to have this and a fast-growing tech platform. I think that will come 2026, 2027. But in the meantime, this is now a new business that is here, that is extremely lucrative for SoFi, and we're just starting. So imagine what can happen in the next coming years. And then if we switch to what Tanner said in his video, this is his video. So if you see that thumbnail, that's the video. I didn't want to show his picture when I screenshotted that. It was a bit strange. So you get the thumbnail. Here. So basically he puts out here the Fortress deal, the Blue Owl deal as well per quarter, or at least the next 2 quarters, and then the other deal percentage. So 40% base case or low case, then we have 50% and then 55%. So all in all, in scenario number 1, by the way, they all have the same take rate. You can basically calculate that based on the information that we've got in the last earnings call. So scenario number 1, total LPB originations, $1.875 billion. We've got close to $80 million of LPB revenue. And then of course you have servicing fees, $7.5 million, which brings us at $87.1 million for this scenario. Scenario number 2, where the other deal percentage is at 50%. Here, LPB plus servicing, we're already at $104.6 million of extra revenue. And then in scenario 3, more positive of course, 55% here, we are reaching $116.25 million of additional revenue with just these 2 players taking into consideration. And then of course, you change here the percent of the other deals. But like I said, this is just the start. And look at what we're getting here, close to already $100 million of extra revenue. Again, fee-based, high margin, low risk. The best of the best. This is a quote by Anthony Noto, and unfortunately here you're getting the screenshot of Tanner. So Anthony Noto said one of the things that we contemplate is, could we push all of our lending into the loan platform business over time? And I'm not opposed to that at all. The economics are very attractive. The velocity is much higher. The capital is lower. You have a lighter balance sheet and would really support higher return on equity, especially that last part here. You have a lighter balance sheet, which could mean that this could allow SoFi to just be way more aggressive moving forward. And let's be honest, why would we be opposed to them doing so? It would make sense, right? It would make sense, especially if you look at those numbers here, you look at those assumptions. It makes sense. And so yes, it's very possible that a year, 2 years from now, we're going to be talking about a very, very different SoFi. And I know it might be scary to some, but to me, as long as I see things going up and to the right, revenue continues to grow up, margins continue to expand, profitability continues to be better and better, I don't really care, to be honest. So go ahead, do whatever needs to be done. So that's the SoFi part of the business. Then PayPal. So PayPal's Keller had a couple of things to say, I think a week or so ago during a Bank of America conference. So he started talking a bit about the new products for PayPal. So he reiterated the expectations to have 80% of its merchants on the latest integration by 2027. It started with the cohort of US merchants on its latest integration, around 30% of the total, and is now moving to the rest of its US customers. From there, it will move to Germany and then UK, where about 50% of merchants are at least in its latest checkout. That should mean faster ramp up. When most of its merchants are on this new flow, it expects to more aggressively sunset older processes and push the stranglers to this new product. Importantly, it is not offering direct incentive to drive this volume. Instead, it is finding communication of the value proposition, higher conversion, and demoing the new flows as more than enough to convince merchants. He told us that there will be 1 point of acceleration from the new branded checkout, 1 point of acceleration from Buy Now Pay Later, 65% pre-approval rates thanks to its massive customer base and embedded Pay Later options are helping PayPal secure strong market share positions in all 7 markets where this is offered, and 1 point of acceleration from Pay with Venmo. Pay with Venmo merchant adoption rose 50% year over year in 2024. A couple of extra comments here on Fastlane. PayPal is prioritizing building user base and engagement for Fastlane over direct monetization. It's viewed as a top-of-funnel tool for cross-selling other PayPal services, fraud management, chargeback protection, for example. Fastlane increases merchants' interest in PayPal's broad service offerings. Direct monetization of Fastlane is expected in the future due to its ability to significantly increase checkout conversion. Then PayPal is implementing a meta-style playbook for customer acquisition on Fastlane. And the last point here, Fastlane has strong channel partnerships. If we look to Braintree, which is now PayPal Enterprise Payment and Hyperwallet, now Enterprise Payouts, to make it simpler, let's be honest. So PayPal Enterprise Payments, or Braintree, boasts a 5-point higher authorization rate compared to competitors like Stripe and Adyen. Thumbs up. This advantage stems from PayPal's extensive customer data and superior checkout personalization. PayPal opens integration with over 100 payment service providers, enhances transaction orchestration. PayPal is shifting from a lowest price strategy to a value proposition strategy, which is why we're seeing revenue slow down, but profitability go up. The pricing change has a temporary revenue growth headwind, but a transaction dollar growth tailwind. No merchant churn occurred due to the pricing changes, and lost volume has been recovered. Great to hear. Growth levers include international expansion, omnichannel processing partnership, for example, with Verifone, and industry-specific product localization. Now, of course, with PayPal, or PayPal shall we still say right now, the success is still not reflected in the stock price, let's be honest. And yes, it is painful to look at it, but then again, as long as the business does what it should be doing, eventually the stock will start moving. That's what we've been saying with SoFi as well. When SoFi was trading at $7, suddenly it clicked and we went above $10, above $15, actually close to $18. Okay, now we're back to 13, but still a big increase year on year. Yes, PayPal a month and a half or so ago was closer to $90, $100 or so. I wouldn't be surprised if we start testing those highs again after the next earnings report. Of course, I've been quite bullish on PayPal. I thought we would be at $100 already. Market's proving me wrong at the moment, but I think that in the long run I will be proving right, because this still is, in my opinion, one of the most undervalued names in the market. So longer than expected video. SoFi, PayPal, still very, very bullish on both of those names. Share your thoughts down in the comment section below. Like, subscribe, all of that, and I see you all in the next one. Bye-bye.